Welcome to Japan Market Brief, the daily English audio update on what moved Japan's markets and what matters next. April 2nd was a reminder that Japan's rebound could fade quickly. After a strong recovery session the day before, Tokyo stocks moved lower again as President Trump's speech hurt risk appetite and investors turned cautious. The Nikkei 225 fell 1.87% to 52,732.82. That does not erase the prior rebound, but it does tell us something important. The market is still highly reactive to fresh global headlines, which means confidence remains shallow. The tone of the session was defensive. NHK reported that the Nikkei at one point dropped more than 1,000 yen after the speech. That kind of move immediately after a big rebound shows that investors are still quick to cut risk rather than assume a stable recovery is in place. Currency moves added to the pressure. Dollar yen moved back up to around 159.31. That is not a new extreme, but it does bring the pair back toward the zone that has made Japanese investors uneasy in recent sessions. When the yen weakens again, while equities are losing momentum, it becomes harder to argue that the market has regained a firm footing. The US backdrop was not disastrous. The S&P 500 was still slightly higher, but Japan clearly traded on its own mix of political headline sensitivity, currency discomfort, and caution after a relief-driven bounce. There was also an important domestic policy signal. New Bank of Japan board member Toakiro Asada said policy decisions should consider balance. That comment fits the broader message investors have been receiving from the BOJ. Move carefully, weigh inflation against growth, and avoid looking mechanically hawkish. For the market, that means the BOJ is not offering a simple direction signal right now. The central bank is still part of the background, but not in a way that resolves investor uncertainty. Instead, the market is left to trade a difficult mix of sticky prices, uneven corporate outlooks, and a currency that can still become a problem quickly. Today's stock to watch is Mitsubishi Materials. NHK reported that the company invested in a U.S. recycler of rare earths and rare metals. That is notable because it gives investors a new angle on Japan's supply security theme. Over the past several sessions, the resource story has mainly been framed through oil, shipping routes, and Middle East risk. Mitsubishi Materials broadens that discussion. The company is now tied more directly to the supply chain for critical minerals, which matters for advanced manufacturing, industrial policy, and long-term strategic resilience. This is also not a random one-off headline. Mitsubishi Materials has already been signaling a wider push into resource circulation and recycling operations in the United States. So this investment fits an existing strategic direction. That is why the stock matters beyond a single day's news flow. It offers a clearer way to track how Japanese companies are positioning for a world where stable access to critical materials matters as much as access to fuel. For the next session, there are three things to monitor. First, whether the Nikkei can stabilize after giving back part of the rebound. Second, whether dollar yen stays near 159 or starts moving back toward more stress levels. Third, whether investors keep rewarding targeted strategic themes such as resource security, recycling, and supply chain resilience. If Japan can hold near current levels despite the headline shock, that would suggest the rebound still has some structure underneath it. If not, then April 1st may look more and more like a one-day release valve rather than the beginning of a broader recovery. That is all for today's Japan Market Brief. Thanks for listening.